Very good morning, good afternoon, everybody. Hey TM, hey Ram, morning Najam, Sook, hey Stephen, Lauren. Okay, folks, here we are all together, getting ready for the CPI inflation print. That's the big one today, and I'm going to show you what I'm looking on that. We'll run through that euro dollar short from that region we were looking at yesterday, and then we'll get into it was made sense with the price action, just the reaction to the non-farm payroll. We would have typically expected a lot more strength on that non-farm payroll print. The fact that we didn't, we just had that range-bound action, given the fact that inflation was coming today. Markets are a bit weird. They're all out of sync with the data getting delayed by the US administration, so it's all a bit weird. All right, folks, let's just remind ourselves what we're trying to do here in these sessions. What we want to do is we want to understand the fundamentals and the current sentiment to find a technically savvy trade opportunity for the day. Now, in order to understand that sort of daily sentiment, we always want to take a look at the first thing I do, just open up the European session, right? So let's see what's been going on in the European session and have a look at the headlines. A couple of things that are standing out to me. One, right? Tech underperformed as AI disruption concerns re-emerged. There's a principle here, and I've said this before, but remember, whenever there's a new industry, a tremendous amount of hype develops around it. And the mistake that many investors make is they think, oh, AI is the future, so I'm going to invest in these AI stocks. And then all of a sudden, they lose 60, 70% in a day, that kind of thing. And that's because the technology shifts so quickly. And this has happened historically in the past. So, for example, when air travel was seen to be the next big thing, okay, and of course, air travel was the next big thing. It overtook the railways in the sense of its influence and the ability to connect people. Yes, but there were hundreds of companies that tried to take advantage of it, but only a few survived. So whenever you have like these big sort of new technologies develop, whatever there is, think, okay, how do I get into an index? Like an AI index or something, rather than trying to put all your eggs in one basket. So that's a related point. But the reason it's relevant is AI disruption concerns. Now, yesterday, I was trading the ES and it kept selling off. And it was on a relatively minor headline about some AI tech company developing some new ability to process data in a way that was going to be potentially disruptive, right, to competitors. You know what I mean? And it just kept selling. We were in a short. Najam had a lovely short in the ES futures yesterday, and we were like, oh, is it going to hit? Is it going to hit the sort of the value area target? And it just kept going on and on and on and on, lower and lower. And it's because, just remember, any sniff, whiff, hint of AI disruption, markets wanting to sell off. So that's just be aware of that, and that just put the risk off mood on, and that actually gave us some dollar strength yesterday. Apart from that, got geopolitical headlines, deal Iran could be done. Trump's going to meet with China and Xi in April, saying that the relationship's good. Okay, that's what we want. Dixie lacked firm direction. We know that because waiting for the inflation data. There were some comments from Japan about BOJ's Tamura, but that failed to spur price action, and he reiterated they would keep raising rates. So now maybe the yen can weaken again for a little bit on that sort of carry trade idea. We'll see. Yen's a bit choppy right now. There's one trade that I see today, right? And it's on the CPI print. So there's not really a lot going on out there. So I think it's either like trading the S&P 500 on AI disruption and looking for short opportunities. That's opportunity number one that I see. Or opportunity number two is all going to hinge around this inflation data in the euro dollar. So we'll look at that. Before we look at that, let's just look at the trade from yesterday. Hopefully I've still got that up. I think it's okay, it's been removed just as I've been looking at some other things. But the entry was up here. We were looking at, it was this kind of area. Looking for a 5-point stop, take 50% off at 20 points, right? That was the trade. It was that kind of idea, and we got it, right? Now, you've got two options if you're still in. So 50% off should have been taken off at 20 points. right? So that was the place to take off, and that's like, that's a good, 4 to 1, 2 to 1 overall just on that move there. And then to be honest, I just you should put it's so close to the entry, I just take it off, right? Because what I'm looking for here, the bet sometimes you'll see a market has got a disposition, right? And as we've said yesterday, that non-farm payroll print from Wednesday, right? That should have moved the dollar a lot higher. And I was speaking to CNBC Arabia yesterday, and that was the thing, like, why didn't we see the dollar strength on that print? And it was unusual. So is it the de-dollarization theme? Is it the fact that the markets are waiting for inflation data? There's one thing it does tell you, markets are quite happy to sell the dollar, right? And there's a saying in the markets, which is this: if something can't rally on good news, it can't rally at all, right? That little saying is a way of like summarizing a kind of a market reality. Sometimes like the market just doesn't want to buy the dollar, and it doesn't necessarily make sense because we saw a change in the interest rate curve, right? Remember on Wednesday, the market was expecting 3 interest rate cuts, nearer to. Now it's nearer to 2. So there was a shift in short-term interest rate markets. Now, I still my view, and of course this comes down to opinion, and I can be wrong, okay? My view is still, well, okay, I think short-term interest rate markets are still going to be the biggest driver of the dollar. But, right, let's see. What I see here is a market that wants to sell the dollar. So the best opportunity is something that gives the markets permission to sell the dollar. So this is what I'm looking for, okay? All right, so I'm just going to put this right into the chat so you can, right, that's what I'm looking for. Right, so I want to see the core coming in 0.1% or lower. I want to see the core year on year coming in 2.3% or lower. I want to see the month on month coming in at 0.1% or lower. I want to see the headline coming in at 2.3 or 2.2% or lower. And I want to see the priors unchanged. That's what I want, right? And if I get that, I'm going to have a buy euro dollar at market. And the logic is going to be like this. The logic is going to be minor break of a Harami inside bar, as you can see. Now, say this carries on lower and you get that weak CPI print that I've outlined, then it'll be a major break of a Harami inside bar. So in other words, this is just primed for upside. So in terms of the level, right, to go with, it's here. It's actually in the short term. I'm going to get rid of that level now because that was from yesterday. What you're looking for is this, right? 5-point stop, try up to 3 times on the week print, right? And then looking for a run up to 1.200. So it's like I'm looking for like a 20 to 1 risk reward. Okay, that's the kind of going to be the outlook. Easy execution above that level. Now, if you get a bit closer to the session, right? Say you can get in underneath. If you can get in underneath there, brilliant. Like the other option is going to be just taking out that 75 here, right? That's the other option. So both of those will be decent opportunities. Yeah, and notice what that would represent. That's representing a break of that Harami inside bar. In other words, you're going back that direction. So, if the market really wants to sell the dollar, that's going to be your swing point. And notice, what are you doing? You're also going above this trend. You're breaking out the trend line as well. So it's very hard for the market to chop there because it's either up and away, right? Or back underneath. So that's your level, right? We've got this minor level. I'll take that off. I want you to focus on this level. 4 or 5 point stop only, try up to 3 times. That's the trade. Again, it's 15 points risk. We're not trying to be heroes. Remember that weakness with normally, this is the weakness of macro trading. Normally, and CNBC Arabia, a guy called Hussein, great anchor. In fact, one of the reasons I do the interview is because I really like Hussein. He asks really good questions. And like that, and that's exactly the point, why is the dollar not moving stronger? Normally you'd expect it to, right? And see, if you're just trading the pure macros, you would have been justified to have gone along the dollar, right? At market, reasonably looking for a test down at that 1.7 recent low. Totally reasonable, but we didn't get it. right? So that's why, just be clever. Always be clever. Always think, how can I be clever? And today, the way to be clever is as I've outlined there. Now, the opposite is also true, right? We could expect some more dollar strength, but again, we've got to be clever with it. So if we see month on month 0.5%, year on year 2.8%, month on month 0.5%, headline 2.8, 2% or higher. In other words, if we go above the high of expectations across the board, the priors are unrevised or revised higher, then we're going dollar strength and we're going to express it in the euro dollar again. But this time we'll be looking for euro dollar short. Now, what could you look for? Well, let's just look at an obvious area. There's two obvious areas, right? One, short underneath that swing on the data. Otherwise, here. So these are your two, major areas, right? Because this is really representing the range of yesterday, and really what you're trying to break out with the range. That's what you're saying, isn't it? Right? That's what you're saying. That's the outlook. And what you can do is try up to 3 times at both of these levels. That's the trade, all right? And what you're looking for is those triggers, what you want. And then, right, you get the triggers, then look at these areas. Keep your risk minimal, folks. Minimal. I remember like when we had that week data, remember TM was scalping, right? But look, I scalped as well. It's high risk when you scalp. You got to make sure your risk is thing. Look, and you got like 5, 7, 4, 7, 10, 15, 20 points. That's all. But remember then what we're looking for, right? Okay, you got a trend line break. Okay, you got a trend line break. So trend line break, on balance volume pushing lower. You could look for that retest of a moving average, things like that. Okay, but just keep your risk minimal and keep your risk managed. And notice, remember, this area is we were going short from. So if we get like, you can see, well, that's obvious area. That's where dollar spires were buying. And if there's no reason for them to buy in anymore, that's the obvious pivot point. Is that making sense to everyone? So we've got a very, very focused trade idea today. You can see consolidation. I'm going to take and that's what we're looking for. Other things that I saw as I was looking around, just worthy of mention. WTI, right? We had this sort of false break of Harami inside bar sell-off. Oil is jittery because of the geopolitical headlines. This is like peace with Iran on the cards. Structurally, there's too much oil in the market. And if there's even more oil in the market, then it's sell oil. So the market wants to sell oil. Look at this. Right? What have we got here? We've got a breakdown through a trend line. So we've got the first evidence of a trend change. So that means any retracements higher, right, look for short opportunities. The problem with it, right, will be all of a sudden, US President Trump will say, I'm sending over another aircraft carrier, Iran's in big trouble and they don't do what I say, they've got 24 hours. Trump's like, and all of a sudden all shoots up. So that's the risk with it. Yes, Najam earning his moniker flagman again, which is exactly this. Look. Beautiful work, Najam. That's why you're the flag man, right? It ain't gonna change. You see this, like, beautiful little flag. So what you got the trend line break on the daily. You got the fundamental reason for oil moving lower. You've now got a flag forming. You go for the height of the pattern. So from there, hang on, I'm being a bit generous there. From there, you get a breakout from here. You're looking really around, let's call it the 61. Right, that's your target. Nice, very nice, Najam. Right, let's just, gosh, should we just put that up? ADX. Just trying to see where the ADX is on this. I'm not sure I got the right one. Okay, I'll have a look at that for later. So what you're looking for here again is you could use the same principle. Yeah, I'll work it out some of the time, Ram, so that I'm not faffing you all around while I'm trying to work it out on the session. Thank you, though. Yeah, okay. Let's just have a quick look. Thank you, Najam. Right. So what Najam's pointing out is this little setup called the Holy Grail setup. It's a 20 EMA. So there's the 20 EMA, right? And you got the ADX above 36. So a nice area for potential shorts, right? And if we get the bear flag breaking out, then the other like kind of potential entry is like maybe a 15-point stop, like try up to 2 or 3 times and moving lower, right? That is sort of 11-to-1 risk reward, something like that. Yeah, euro pound. Yeah. Now, euro pound again, technically, very attractive. Now this is another little setup called a pin bar inside pin bar, which I really like. Where is it? Here it is. Here it is, right? So a market, that's great. Notice we've done the analysis for this before. Trend line, false break, pushing above. Yield spread, higher highs, higher lows. There's nothing really driving the euro individually at the moment massively. Market quite just sort of flat on the euro. The pound has reasons for weakness. GDP out this week. Excuse me, disappointing. We got wage and inflation data out next week, I think. So we're looking for euro pound upside up to the 8,800. I've got a long here, right? And if you look at this, another day holding above that trend line. And this is now a Harami inside bar or a pin bar inside pin bar. Now, typically they run higher, all right? So if I'm going at market, just go for, you can go for an entry at the 8,717, the break of that inside bar. Just in case you're not in it, in case it does drift lower, just get a bit of momentum on your side and go for the 8,717. And then if you get a break above there, you can bring your stop up anyway, right? Because you know you're clearly structurally going higher, right? And that's what I'm looking for, the 8,800. Technically, fine. Technically, fine. Reasonable. Everything's reasonable. So it's both breakout of the inside bar. It's starting to move in your direction. Good. Breakout of the mother bar, even better. Break and hold above the mother bar, then it becomes a 3 inside bar up pattern. Right. So there's 3 little clues. Break of the inside bar, great. We're moving in the direction. Break of the mother bar, fantastic. And then a break and hold, close above that area. It's a 3 inside bar. Look for a breakout retest. Remind me next week. We'll have a look at it on Monday. Ram. Yeah. But again, remember, you've got to get your risk sorted here. So there's no point if you've been making money on the euro dollar trades, right, to all of a sudden give it back on 1 euro pound trade. So remember, your total risk at 38 points, you need to have a different position size. So I've got a position which is equivalent to me trying 3 times on the euro dollar. That's my risk. So I can take the full loss and just say, fine, I was wrong. Right? No drama. I can forget it's on, doesn't matter, and I'm looking for the 8,800. Okay? Remember, you've got to get your position sizing and your risk right. Apart from that, word of warning, just watch out for that AI story. It keeps coming back over and over again. AI worry about this, AI worry about that, and the market keeps wanting to sell. And we did see some pretty heavy selling yesterday. Euro data isn't having much impact at the moment. Swiss inflation, just notice that's going negative, so that's there'll be increased talk about negative Swiss interest rates. So very, very strong dollar Swiss franc longs will be okay. Yeah, good point. Now what I just said, yeah, thanks, Nadja. That reminded me of something I was looking at, right? Now yesterday, like we had a lot of sellers coming in, they trapped the buyers up there. Okay. So in the very near term, if we're looking at that kind of action for now, right? But notice as well that we had all these buyers come in here. So we're looking for a pullback potential buy. So we're in as Najam says, we're in a range. You can make a case for sellers from above, right, and buyers from below. And we're staying in this range, and you've got that bullish engulfing bar. So this is still a bullish area here. But just remember that AI news keeps coming in, and it keeps sort of rearing its head. Just keep an eye on the NASDAQ. Use something like FinViz, see, okay, it's still NASDAQ's still positive on the day, but if you start seeing the NASDAQ getting hit quickly, go along to the news squawk, and just sometimes it's easy to miss. Like it can be some like fairly innocuous headline that sometimes doesn't even get spoken out because it's a stock and it's some new development. So just be aware of that. Just as AI sensitive, anything to do with AI, just check it out. And the market wants to sell on negative AI headlines. So it just wants an excuse to do it. And obviously watch out for this geopoliticals, US aircraft carrier heading to the Middle East. So just keep your eye on that. And obviously US President Trump. All right, folks, I think that's it. So trade savvy, trade smart. You've got your euro dollar levels. They're the ones to be looking for. They're the hot ones of the day. All right. Take care, folks. Yes, guys, I'll see you later. Enjoy the rest of your morning. Yeah, have a great weekend. Thank you. I forgot about it's an NFPB on Wednesday. I forgot it was Friday. Yeah, gold. Now, gold is so a couple of things to point out on gold is one. Just bear in mind this reaction. When you've got yields going lower and you've got the dollar going lower, that supports gold higher. So gold has got supportive reasons for upside. If we see reasons for dollar weakness later in the session, right, euro dollar upside, also expect gold upside at the same time. Let's just try and find the major levels for us. That's the oil trade. Where is gold? Bit choppy. So with gold, what I've been looking for is just something that's a clear break of a major level. So just watching for something that clearly breaks. Remember, we had that major level in gold, the 4.9, that region here. I just haven't really got a clear bias on gold. I think if there's anything for dollar weakness, then looking for gold upside. I haven't really got a setup personally on it. It's just a bit messy. So sorry about that, Stephen, but I haven't got anything clear to really point out apart from that major trend line and the bias that I'm expecting gold to continue higher. So broadly speaking, just looking for that trend line to be supported. That's all I've got, I'm afraid, Stephen. So apologies for that. I wish I could give you something more insightful. Take care, folks, and look forward to seeing you later. Bye for now.